Goldman Sachs just ran the numbers on the AI boom. To pay for itself, it needs to earn over $1 trillion a year. It's on track for less than half. Hundreds of billions are still pouring in, and the smartest money on earth is making a bet you'll pay for. You've never bought an AI stock, but it's already inside your pension, your index fund, your savings. What everyone's calling a boom, the math is calling a countdown. This isn't about whether AI is real. It is. It's about who's left holding it when the money runs out. We've seen this before. In 1999, the internet was real. The technology worked. And still, the bubble burst, wiping out $5 trillion in value overnight. Today, AI is real. The technology works, but real doesn't mean profitable. The warning signs are identical. Last month, shoe company Allbirds rebranded to New Birds AI, no actual AI product, and the stock jumped 500% in a week. This isn't innovation. This is panic buying. In 1999, companies added .com to their names. Today, they add AI to their pitches. OpenAI generates $3.4 billion in annual revenue. It burns through over $5 billion every single year. Anthropic, $1.5 billion in revenue, $4 billion in costs. These are the two most advanced AI companies in the world. Neither one makes money. And both are racing to IPO to raise the capital they desperately need. Then, in January 2025, everything changed. A Chinese startup called DeepSeek built a model that matched GPT-4 for just $6 million. OpenAI spent $100 million on GPT-4. In a single day, $600 billion was wiped from the US stock market. The assumption that only trillion-dollar infrastructure could build frontier AI collapsed. Goldman Sachs spent 2 years studying AI's impact on real businesses. They're finding 90% of companies using AI haven't seen a meaningful improvement in productivity. Yet, the word yet is doing a lot of work there, because $200 billion has already been spent chasing that yet. Here's the physics problem no one can solve. It now costs 5 times the energy and 5 times the money to make an AI model just 2 times more capable. That curve doesn't bend. The data center build-out now consumes more electricity than entire countries. In every gold rush, the real money is in selling shovels. Nvidia's profit margins hit 55% last quarter. They don't care if AI is a bubble. They sell the hardware that both sides of this bet require. When the dot-com bubble burst, Cisco fell 86%. Is Nvidia this cycle's Cisco or something different? So is it a bubble? The technology is real. The demand is real. But when investment requires $5 to produce $1 of value, something eventually gives. History doesn't repeat exactly, but the pattern is familiar. Too much capital chasing too little revenue for too long. The question isn't whether AI will change the world. It already is. The question is, who gets paid when it does? Who gets paid when the AI bubble pops? Here's the answer almost nobody wants to give you. The most valuable company on the planet doesn't sell AI. It doesn't even have a chatbot. It sells the shovels. While OpenAI and Anthropic burn through billions, someone is quietly collecting on every one of them. And by the end of this, you'll see why you're already in this trade, whether you chose to be or not. In 1849, almost nobody got rich digging for gold. The people who got rich sold the shovels to the ones who did. Today, that company is Nvidia. Its data center business alone made $193 billion last year, up 75% in 12 months. Nvidia doesn't care if OpenAI wins, if Google wins, or if every last one of them goes bankrupt. because all of them have to buy its chips first. It gets paid on the way up, and it gets paid on the way down. But here's what no one tells you. Nvidia designs its chips. It doesn't make them. Only one company on Earth can, a Taiwanese firm called TSMC. And TSMC can't make them either without a single Dutch company called ASML, the only company alive that builds the machines advanced enough to print these chips. One supplier. There is no second. The deeper you go down this chain, the fewer companies there are, and the more impossible they are to replace. And underneath all of it sits the one thing money can't print fast enough: power. You don't run artificial intelligence on hype. You run it on electricity. Data center power demand jumped 17% in a single year, and it's on track to triple by 2035. America's utility companies, the boring ones your grandparents owned, just gained $500 billion in value. Microsoft signed a 20-year deal to restart a nuclear reactor at 3 Mile Island just to keep its servers running. When you can't build a power plant overnight, electricity becomes the ultimate toll road, and everyone pays the toll. Now follow the money. This year, 4 companies, Amazon, Microsoft, Google, and Meta, will spend over $700 billion building this infrastructure. That money pours out of the labs that are losing money and straight down into the chips, the factories, and the grid. The labs are gambling. The infrastructure is collecting. So, what does this mean for you? Remember the dot-com crash. Amazon was real. It survived, and it still fell 90%. It took 16 years to break even. Cisco was the Nvidia of its day. It fell 88%, and 24 years later, it has never returned to its peak. The technology was real. The investors still got wiped out. And here's the part that should stop you cold. 7 companies now make up nearly 35% of the entire S&P 500. If you own an index fund, any index fund, you are already in this trade. Nvidia alone drove 20% of the market's gains last year. You're betting on this, whether you chose to or not. So when this corrects, and it will, the money won't vanish. It will move. Out of the hype and into the things the hype was built on. The miners came and went, the shovel sellers stayed. History doesn't repeat, but the pattern always rhymes. So, don't bet on who wins the gold rush. Own the ground they're all standing on.